Hello, everybody, and welcome to this is Andrew Giovinazzi, Chief Operating Officer of Option Pit, welcoming you to Friday. We'll just call it the Swiss week. The day the Swiss served up a surprise. Actually, the week the Swiss served up a surprise for everybody. But before you do that, a couple of timely things. One, tomorrow our monthly event, free for all Option Pit Live and above members. So Option Pit Live, Gold, Platinum, and Professional. You get these goodies monthly from us just because we like you. However, if you're not a client, you have to pay us. Okay, $97. Right? About, funny enough, risk control. How to use options instead of stock to control risk. Surf on over to optionpit.com/events and sign in. What do we have today? Well, why risk control? Let's just look at a couple things. FXC. Okay. You're trading this company and it's out of business, it looks like. Right? That's why we have risk control. Things happen that you don't expect. Risk control is not for what you expect, it's for things you don't expect. Real simple. Fat tail risk. Okay? FXF, we covered this. This is off the charts. Okay? Off the charts real risk for a currency desk. Okay, because a move like this is barely even is registering in their 3 standard deviation moves. Remember, this product was a just under 10% vol product, and it made a factor move above that. So the Swiss took everybody by surprise. It was trading much higher at pre-market now, and it looks like it's kind of rolling back up as there's still some covering going on. Don't know how long that's going to last. But the whole brokerage community, that set shivers through, right? Things happen in bad places, and it makes bad things happen in other places, like U.S. stocks. Okay, and in the past year or so, we have had, yesterday, not a great day. We had another 1% down move, kind of flat the day before, but nothing has really recovered us, I guess. They didn't like the retail sales number, even though most of it was gas. I'm still kind of puzzling on that one. Either way, though, the market is sitting here right around 2,000. Remember, it did this for a while the last time. Hold on, I got to kick somebody out. Wait a minute, I got to do some kicking. Okay, I can't do that, so I got to do some kicking. Sorry about that. All right. So what we have is a market that doesn't really have many catalysts to go up. Earnings have been kind of crappy. Intel earnings, where's Intel? Down $0.50 now. Crap earnings. Goldman Sachs down $3. Crap earnings. Okay. The earnings look good, but for their forward forecast, not so good. So just a lot of yuck. Right? Not a lot of good. We have 2 important dates in the future. The 22nd, the ECB supposedly will be either pulling a QE or not. Who knows? My guess is, the Swiss bailed because I don't think they could sustain that anymore. They're just buying too much. They're taking too much currency risk themselves and buying too many other currencies to keep theirs down. And they gave up. So, even with the dollar strengthening and things like that, yeah, well, they own plenty of it. And all of a sudden, the country is not that big. So I think they just decided we're just going to take some short-term pain and not have something be a disaster. You know, you have the Greeks out there, they're holding a lot of currency which they have no control over. So that's plenty of risk, and you know, the Swiss are not big risk takers historically, from what I remember. DAX at life, that's the German index, right? The Germans are balancing their budget, and a low euro is great for them. The Germans are happy. It is in their vested interest to keep the euro going. However, the Swiss just own a lot of euros. So, right, the Germans are just shelling out all that euro-denominated debt. So people are holding kind of different sides of the coin, right? But for our market, we are not going to see a catalyst here. Today's going to be listless and crappy. We might be up a half a point, down a 0.5%, whatever. We could be down a full percent again, right? Because as of right now, there's no reason to buy stocks in front of QE from the ECB, and there's no reason to buy stocks because of earnings, right? The fact that oil is bouncing is not enough of a catalyst for people to buy stocks. So literally, you're sitting at all-time highs. You need a reason to go higher, and that would only really be some kind of easing again. I don't know how much benefit that's really going to have in real terms, but the market loves it. So again, what I would do, iron condors, stay away from trades where you're selling too much individual name volatility too close to the money. Those have not worked recently. Anything you have, it has to have a controlled delta, something that you could, because the market could slide away another 1 or 1.5%. So collecting long theta is not easy. You have to stay out of the money or something very controlled, near the money short term. Something that's at least somewhat hedgeable. It's just hard to keep up with it. Other than that, we're just kind of sitting here going nowhere fast. I don't expect VIX now to really see any real moves down until past the ECB, just because the possibility of the huge gap on the upside. So in our pit report today in the chat room, that's the kind of stuff we're going to look at. Setting up for just, possibly titanic moves either up or down. Because at this point, I don't think you do a lot near the money. I think you kind of concentrate on where you can see something out of the money because, again, tails are expensive and the market is moving. All right. We're also going to look at, I think, a little ARB in the home builders, something that I thought was interesting. We could look again at this FXF trade. But again, there's a lot of volatility in this product still. So I would be wary of that. Lastly, just one check here. Realized volatility. VIX up, VVIX down, is that a tell? The only thing I would say from that point of view is it's hard for VIX volatility.
You need a refill too. Do you want me to talk?
All right, I'm going to have to kick you. If you don't mute, guys, I got to kick you, okay? All right, so let's just look at vol here. Right, still pretty high. It's not as high as it can go, but it's still extremely high. And I have VIX up small. Again, these are just small moves because not much is really happening right now. But the idea is the implied vol is going to stay high because it's trying to hold a large event. Okay? All right, everybody. I'm signing out. Anything I would do is there are hedge trades. All right? And other than that, I will see you all in the pit report in the chat today and have a nice weekend. But don't expect vol to come crashing down before the 22nd. I don't think it's happening. All right, everybody. Bye-bye.